Hey everybody, Chuck Barone here. Wednesday, February the 8th, 2023. Interesting day to talk about today. We got a little bit of detail on Powell's speech yesterday. Some of the message he was trying to get out there I think is important for you guys to hear today. As always, before we start the show, I just want to welcome everybody. Thank you guys for your support. What you guys do for us every day, it means the world to us, guys. In the markets today, well, stock market giving back the gains it gained yesterday. It kind of seems like stocks are kind of just drifting right now. Earnings still coming in okay for the most part. But, now the market reacting, of course, you got the parade of Fed yo-yos out there. Each one, spooking the market more than the next. I don't know, if these guys are trying to do that, trying to keep this market down, trying to make this market understand that maybe they don't exactly have the strategy the Fed's going to pursue figured correctly. But nonetheless, stocks down across the board today, the Dow down 207, leading the parade. Bond market today, not a bad day for the bond market. A little bit of gains in the bond market with the yields falling today. The 10-year sitting at 3.65%. That's down just 2 basis points. The 2-year at 4.43%. That's down just 3 basis points. Now, this is kind of the way a bond market should be functioning. Very placid, very, this volatility we've been seeing, up and down 15 basis points, 18 basis points. It's typically not the way the bond market behaves. So a nice calm day like this, even an up day for the bond market, it looks orderly and not like just, what's the right word, knee-jerk to the markets lately. The dollar today up very small, 103.48 on the index. Dollar still holding strong, bouncing from lows about 2 points lower, 103 and change. Now getting back up. I think that as long as the market believes the Fed will raise rates or continue to or keep them higher even, the dollar stays strong. I think that the message from Powell yesterday and all of his minions today has been that is exactly the plan. So, the dollar going to hang, I think, for a little while. Of course, metals today had small gains, even with the dollar kind of up today. Metals going up as well. Not a big day for metals. Gold up $3.20, $1,876.70 per ounce. Silver gaining 14 cents per ounce, $22.39. Decent prices for metals right now. In the face of a strong dollar especially. You guys have heard my prediction over the past couple of weeks. I really believe metals want to run. I believe there's some room still in this rally. I think we're going to see $2,000 an ounce gold. We're going to see $25 an ounce silver. I haven't seen anything in these markets to make me reconsider that position. Oil today gaining, small gain for oil, up $1.28 per barrel. West Texas Intermediate, $78.46 per barrel. That's not a bad price for oil. It's still high. Don't get me wrong. I like to see oil personally in the 40s, 50s. But oil was trading much, much higher a year ago. I remember the trough we were in from $80 to $85 seemed like forever. Then it broke out to the upside. Has since come down. Now kind of inching its way back up. It looks like the trend right now is a little bit up. We'll see how, oil is super sensitive to rumor and data. We'll see where it goes over the next months. Of course, we'll keep you guys posted. Bitcoin today down small, just over $300. 22,928, back under the 23,000 number. I think Bitcoin might hover here for a little bit, kind of going back up, up and down around that 23,000 number. I think the resistance obviously is there with it going back down below, but it seems like Bitcoin has some strength. It seems like this, it's really holding its own from its bottom. So we'll see where it goes. Of course, again, that's another one we're going to keep you guys posted on over the longer term here. Now, getting to stuff you guys need to know today. Getting to Powell's speech yesterday. I didn't really have a lot of time yesterday to digest it before we taped the show. So I wanted to get into some of the details that I read today that I think are important to underscore Powell's message. Now, as I've been telling you guys, love him or hate him, one thing we can appreciate about Chairman Powell, St. Jerome, or however you want to call him, this is a guy who has been pretty plain spoken. He's kind of said it in a way where it's pretty easy to understand what he means, unlike some previous Fed chairs, Alan Greenspan. And he's actually done what he said he's going to do. So I think at this point, Powell has been really projecting these Fed moves to the market. He's really done his best when the market reacts what he feels is incorrectly to what his message has been. He's been very strong in his message. Rates are going to go higher than the market thinks and wants, and they're going to stay higher for longer. And I got to say, guys, that was pretty much the main course of his message in his speech yesterday. Powell said, job gains, here's the quote, underscore the need to keep raising interest rates. So now that kind of poked a little bit of a pin into the guys on Wall Street who felt like after this next increase in March, the Fed was going to pause and not raise rates again until the pivot, which, there's where your market wages are going. When will the Fed pivot? Will it be 23 or 24? So, Powell now making it understand, when you use the phrase, keep raising interest rates, most people would interpret that as likely more coming than just that one more bump next month, right? He also went on to say, he did not expect inflation to drop back down to their 2% target, or near their 2% target, until 2024. Here's the quote, I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and patience, and that we'll need to keep rates higher for longer, unquote. So Powell he's telling us directly, the Fed's going to raise rates higher than we think. I really still think, Mom's kind of sticking to my guns on this. I think we'll have one more in March. We'll have another one down the road some ways. Not sure if it'll come directly into April's meeting or whenever, but I think they'll have a little bit of a pause, digest the data, see how the markets are digesting these rate increases. Of course, the employment numbers are going to be huge with them. But as of right now, I really believe we've got 2 more quarter point increases coming. It seems to be the message Powell is trying to make the markets understand. And that'll get them above their 5%. Now the market's starting to factor that in. We talked about it on the show, I think it was yesterday, maybe the day before. The money market's seeing a peak now at 5.1%. That's exactly where the Fed will be if we get 2 more quarter point increases. So I think we've been on the right track here on the show as far as giving you guys the advice you need to understand what's been happening. The Fed, he's making our job pretty easy. I got to give him props for that because he's done what he said. It hasn't been where you need to be have this crazy key code to figure out what the hell he's trying to tell you. And he's actually gone and stuck to what he said he was going to do. We'll see if that continues. Interesting stuff today. Wholesale egg prices coming down, actually collapsing, guys. I don't know if you guys have heard about this. Prices falling, wholesale prices, these are not yet retail. Prices falling to $2.61 per dozen on Monday. That's a 52% decline from the December peak of $5.43 per dozen. So it looks like we're going to finally get a little bit of relief at the grocery store on egg prices, which I'm sure, that's one that sticks out in everybody's mind because most people buy eggs pretty frequently, use eggs pretty frequently. So it's something when you see the kind of price increases we've seen with, eggs usually being about $2 a dozen. Now, as high, I've seen them as high as $7 or $8 a dozen. Knowing that those prices are going to come back down is pretty good news for the markets. I think for just the general consensus on inflation. Bird flu last year in 2022 killed 58 million chickens. 58 million chickens. That's an all-time high. It never was higher than 50 million. 2015's avian flu killed 50 million chickens. So 2022 worst year ever for avian flu in chickens. Now the good news for us is we have not had a new avian flu outbreak that's been measured or recorded since December 20th of last year. And the bird flu typically peters out as the weather gets warmer and warmer. Now 2022 was kind of a weird year because it never did peter out. It kept going the whole year, and that's why the numbers ended up so high. But I think that, if they can continue to get no more outbreaks, it usually takes about 4 weeks for the wholesale price to translate then to retail prices. So it won't be just more than another couple of weeks, and we'll start seeing egg prices really start to come down. Yay for the small stuff, right, guys? To wrap things up today, I thought this was really important. There was a Gallup poll, and it said 50% of Americans polled said their financial situation is worsening right now versus 35% who said it's improving. And this is only the second time in the history of these Gallup polls on personal economics that the majority has said their economic situation is deteriorating. The only other time this happened was during the Great Recession, 2008-2009. It's really, I think now, and that kind of explains how it seems like people's attitudes and the way people really feel about the markets, their own personal financial situation, their job security, and all, their prospects for doing better going forward seem pretty negative compared to really the way the economy is right now. Now, here's the interesting thing that the poll told me. This number here might have a little bit of a political bias to it, because 61% of Republicans polled said they were deteriorating versus only 37% of Democrats. Now, that doesn't make sense to me that the disparity could actually be that big right now. So I think media consumption, depending on what you're getting for your media, where you're getting your media, but I think if you're the typical Fox News versus MSNBC News, that could play a part in your personal feelings. If you're getting bombarded every day with information telling you the economy sucks, 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 well, when they ask you, you're probably going to say the economy sucks. If you're confronted every day with everything's great, everything's getting better, everything's good, look at how good this is going, look at these jobs, look, and they're pointing to stuff and they're telling you how great everything is every day, well, when you're asked, you're probably more likely to say things are good. I think that it's really a shame now that everything now becomes political. I mean, it really cannot be. I don't buy it. That 61% of Republicans are really doing worse versus only 37% of Democrats. I just don't believe that. Numbers don't typically work out that way. So that tells me this bias is real. You tell me, guys, in the comments today, how would you say you're doing right now, or did it even in 2022? Are things kind of deteriorating for you personally? Are they getting better for you personally, or are they kind of just staying the same? We all know that we've had to pay more for stuff Now that would make it pretty easy to say deteriorating, but we also know people are getting raises and making more money. Tell me, guys, what do you think? Deteriorating, getting better, staying the same? Anyway, that's it for today. Tomorrow we'll be talking about unemployment numbers. Big day tomorrow. This is going to be a day the Fed's going to be watching for sure. We'll be back to give you all the gory details. We appreciate your support as always, guys. We'll be back with the wrap tomorrow. Till we talk then.